All right, remember yesterday we were expecting higher correction all the way to 151.20 and 151.50, where we would sell into that right shoulder. This didn't work out. Actually, the right shoulder was located below the neckline, and therefore unless you had been able to get in at 150.9, we're going to be selling 150.9 and 151.2 and 151.5. Unless you're able to get in at 150.9, then you're not in the money, and we expect we're going to be missing that move. Okay, so you would want probably to take profits on a retraction down. You would still hold that that position if we're in. It's the breakout high today again is 150.9. Okay, so let's take a good look at this segregation here. This is key to what we're about to do, and it's a bit mixed. Remember, this is inside the leading diagonal, and anything inside a diagonal or a triangle is an ABC down. So this has done an A, there's a 1, 2, and a 1, 2, 3. This is a B. Okay, so again, this has done an A, there's a 1, 2, there's a 1, 2, 3, this is a B. Current market is doing a C down. Okay, so this section is very important inside of that ending diagonal, because this C is going to be an Elliott structure on the 15-minute chart. It did a 1, 2, it did a 3, it did a 4. It's not labeled, sorry, but it is really probably the correct move. Now it was doing a 5. That 5 is going to be 5 swings into a leading diagonal. All right, it should have been 5 swings into a leading diagonal, and would have taken us to 148.50 and 148.60. It broke out right now out of that ending diagonal. All right, it did break out of that ending diagonal. So this negates the fact that there is a 5-wave swing inside that leading diagonal. It does not, however, negate the fact that wave C itself, this we should have a yellow C here, is actually a 5 swing down, okay, all the way inside a wedge. You're having here this dotted green line and this dotted gray line. Okay, so there really is nothing. It is still bearish because we're having bearish momentum on the 4-hour, and I believe also on the 1-hour. We did do an A and a B and a C. This is an A. All right, so now the market did the B, or could still be an A and a B here. That C is going to be at least 3 swings, if not more. So we did swing A, we did swing B. Now we're currently doing swing B right at the top of that ending diagonal. So right at the top of that wedge, 150.6, 150.9 are the top of that ending, the top of that wedge. Okay, so we still have that C down. We've just that either we've done leg 3 now and doing leg 4, we're going to be doing leg 5, or we have done leg 1 and leg 2 and leg 3 and leg 4 and leg 5, or sorry, we have done just leg 1 and we're going to be doing leg 2, or did leg 2, we're going to be doing leg 3 down. So the actual projection for the pattern analysis, because of the weakness of the sterling, is still to go down. The momentum picture is negative on the 1-hour and the 4 hours. We would consider to sell 150.5 and 150.9. These are the best entries that we're going to be getting now. Breakout high today again is 150.9, and we take this all the way down to 148.6, maybe enough, 148.9. Okay, so we're going down to 148.9. We want to sell. Forget now about all this ending diagonal. We were expecting weakness more in sterling. So it's not going to work. What we're actually seeing again is the correction 4, or correction, actually it is actually correction 4 or correction 2 inside of that wedge. We sell the top of the wedge. We take profit at the bottom of the wedge. Let's take a look at momentum. Okay, so wedge is right here, 150.7. Again, between 150.5 and 150.9 are all sells. We bothered with this line here, but we're supposed to be taking it out. There's a 1, 2, there's a 3, there's a 4, there's a 5. This could be an Elliott structure. It doesn't look like one on the momentum plot, but it means that if this is a 5-wave swing, 1 2 3 4 5, you could actually should respect the top of the structure, should not pass above 150.9. If you're above 150.9, then everything, at least it's not an elite structure, and you want to be out of the market. Okay, so the current market is actually sell right now or around 150.7 and 150.9 again, or 150.8. We will need to be below level B. That is all there is to it. Okay, let's take a look at the momentum picture. Of course, is very important. We're gonna be could be having a zero line rejection right here. All right, that's 1 hour chart, and on the 4 hours, I believe it is not. It is negative. It is flatter momentum, of course, negative and positive, but at least we have some kind of protection by the negative momentum that is showing here. This kind of plot would mean that we are having this type of plot that we have is, it would mean that this is all a wave 1. There is higher degree 1 2, this is a 3, this is all an internal 1 into 3 and internal 2 in 3, 3 3 3 3 5. This is the end of 3. You're looking at actually correction all the way up to 152, technically speaking anyway. Of course, we'll not take it all the way there, we'll just trade the internals, and the internals indicate that we reject or just rejected the neckline, 151.14, 151.20 at the most. Otherwise, we would want to be out, so we just rejected at the neckline. Okay, and the stop is 151.70 or 152, above that level, 152. Okay, we want to sell then 150.9. If you get to see this, we're having 150.9 again as a breakout high. If you get to see that, currently we are looking at 150.7. Stop is going to be 152. We're going to 148.6, even 148.5. So this is 1 hour chart. We're still really interested in the coming zero line rejection because it looks like it is respecting an elite structure. Looking at the 1 2, there's a 3, there's a 4, there's a 5. We should not rise above level 1. All right, we really should not rise above this point. That is okay. So if this is going to trend down, right, it is a 5-wave structure, so it can correct all the way to the neckline again, 151.2. But usually if this is trending, it will bounce below any internal cycle bottom. This is the next internal cycle bottom, meeting it with the moving average, and that's why you always see that the price will spike into a level 1 many times, because this is a 1 2, this is a 3, this is a 4, this internal 1 2 3 4 5. This is a 5-wave structure. It is of course a wedge. It is a 5-wave structure. You will hear that in a 5-wave structure, in a wedge, the waves will overlap. Wave 1 and wave 3 will not really respect the bottom of or the top of wave 1. Yes, because of this reason, because this is a complete 5-wave structure, so you can't test all the way up to the bottom of 2 or the bottom of wave 1 itself, the origin of the wave. Okay, but you should not pass above that. You should not move above 151.2. So again, there's opportunity because the risk is fixed. We sell 151.2, we just have a stop here. Oh, of course, we sell 151 or 150.9. Maybe we will not get 151.2, so we will be out of the money, will not be in the trade. So we sell maybe half size at 150.7, remainder size at 150.9, 151. Stop is right here, 151.8. We want to be out of this if, of course, we are above the neckline and above the moving average. Okay, at that point we know we'll be doing a that C has ended. All right, this ABC in yellow would have ended, and actually the lower boundary, this low dotted green dashed line boundary, is actually higher, and that we have it somehow wrongly allocated. We'll have to have it revised. Could be that we have bounced out of it. This is what the market wants us to be deceived into believing. So today is an entry opportunity in this sterling against the yen, actually on at the very end of the weekend. So there is risk, undue risk going into the weekend. You would want to take only half size entry.